Thanks for having me. I'm Rhylin Bailie, VP Investor Relations for Equinox Gold. Equinox Gold was formed at the end of 2017 with the vision of creating the premier America's gold producer. In 7 years, we've grown from a single asset developer to a diversified gold producer with mines in Canada, the United States, Mexico, and Brazil. And we expect to produce about 700,000 ounces of gold in 2025.
Good to have you here.
Thank you.
You're welcome. Thanks for coming on our platform. Been a while for the.
We've
had the company on for a while.
We've been very busy.
You have building an empire.
Yes.
And still doing it. Obviously, the Calibre deal. Sorry.
Well, it depends if you're North America or South America.
Right. You are right. Calibre we'll go with. Why Calibre?
Well, it started very slowly last May. So if you remember back, we had just acquired, in May we acquired the additional 40% of Greenstone to consolidate 100% of that big Canadian mine into our portfolio. And our chairman, Ross Beaty, sat down with his two long-term buddies, Blaine Johnson and Doug Forster from Calibre. They were just having lunch, chit-chatting, as these gentlemen do. And they're like, we should thought about what it would look like if we combined these two companies, because we had Greenstone, 400,000 ounce a year gold producer in Ontario, and Calibre was building Valentine, which will be a 200,000 ounce a year gold producer in Newfoundland. So these two chunky, long life Canadian gold mines at the beginning of their mine lives, they're like, if we put these two companies together, we will be the second largest producer of gold from Canada, which is wild. And Canadian producers tend to trade at a premium in the market. At the time, Calibre and Equinox were both trading maybe around 0.6 times net asset value, and whereas gold producers tend to trade at sort of a 1.1 to 1.2 times net asset value. So like, if we put these two companies together, we would create something quite exceptional. And Ross is like, no, we're good. We've just done Greenstone. We've got this, we need to get that ramped up to capacity. We've got enough on our plates. And they went back and I guess put together a bit of a deck and came back to Ross again and said, you really should look at these numbers. So Ross went and looked at Valentine, came away impressed. They came and looked at Greenstone, came away impressed. We started crunching the numbers. We've got our Brazil assets. They've got their Nicaragua assets. So you've got this North American, Latin American. Combining these two companies just started to make a lot of sense. And when we crunched the numbers, we're like, this is pretty compelling, and especially at these gold prices. So now we're going to have, with Valentine and Greenstone ramped up to capacity, we're going to have almost 600,000 ounces a year coming just from those two Canadian mines. Plus then you add on the Nicaragua, the Brazil, the Mexico, the United States. Now we're going to be one of the top 15 gold producers in the world with these two large chunky Canadian assets underpinning that. So it really was a pretty compelling transaction.
Eventually, because I'm kind of with Ross initially, would be crikey. We're
You've done so much,
for punishment, right?
Yeah, how much do you need to layer on at the same time?
So talk to me about teams, because that's the thing kind of makes this a bit easier, right? In terms of the combined teams and who's going to do what, because you've kind of got two very similar profiles in terms of that.
We do, and that's another thing that made sense, is we've got complementary assets and we had complementary teams. The leaders at the board level knew each other, trust each other, have worked together historically. We're bringing in their president and CEO is going to come be our president and COO.
Got it. Okay.
And we've had a few questions about that. Actually, like, it's not typical to have a president and a CEO being separate people. But we had that historically. If you remember back to when we were truck mining and the early days of Equinox Gold, Greg Smith, who's our current CEO, was our president. Christian Mila was our CEO. And now nobody's stretched too thin. Like, running a big mining company is a lot of work. Plus you've got to be out there marketing, running the operations, doing the HR side of things. That's a lot for one person to handle. So now you have these two guys who can each focus on the things that they're best at. Darren Hall is going to be the operations person. Greg Smith will be the, running the company person, but now they can bounce ideas off each other. From a marketing perspective, I can send them both out on the road, plus me, so nobody's stretched too thin. And it just makes it easier, I think, to run a company of this size.
Right, and obviously the inherent benefit will be the kind of increased resource and reserve numbers, cash flow.
Well, that's the big thing.
Right.
So these two Canadian assets make sense together. But we get an immediate, both shareholders, like the Calibre shareholders get an immediate 700,000 ounce a year production bump from our producing assets. We get about 250,000 from their producing assets. So if you're looking at layering on that immediate production bump with the backdrop of all-time high gold prices, the cash flow that's going to come out of this combined company is exceptional in the immediate. Plus then you get the growth from Greenstone Greenstone ramping up, Valentine ramping up, our Castle Mountain expansion in California, our Philos expansion. So you've got all this growth built in because we both have these big chunky assets. But the immediate production bump and cash flow, like the analyst consensus estimates at spot gold prices, see EBITDA more than quadrupling in the next 12 months.
Yeah, I can believe that. And I think that kind of transition from the type of ounces that you were producing in the early days to just sort of what we're looking at now, and in this gold price environment, the margins are dramatically changing, right? and I think the other thing people need to understand is the ASIC or all-in cost, whatever one measurement, that has moved. COVID has changed the landscape there. So you kind of need this high-price gold environment to function at a margin which is, I guess, exciting to people, because you got to be able to get the cash to be able to do the things you want to do. So I want to talk about the things that you want to do. So you did a bit of tidying up of the balance sheet last year, probably setting yourselves up not just for the Greenstone, but maybe an opportunity like you just on Calibre.
Even before we announced the transaction, we did say that our number one capital allocation priority for 2025 was paying down debt. So during our Q4 call, Pete Hardy, our CFO, said we're going to pay down at least $200 million this year. This lets us accelerate that, right? So our target is to be pre-transaction. Our target was to be at a debt to EBITDA ratio less than 0 by 2026, by the end of 2026. This will accelerate that, allow us to rapidly deleverage the balance sheet. We could be at at that 1x ratio this time next year, like much faster, which lets us start returning capital to shareholders much faster. Right. So we've been saying since the beginning, Ross is like, we want to pay a dividend one day, but we would like to do some share buybacks. By combining these two companies with the cash flow that we'll get, we'll have the guidance for this year with the combined companies is 950,000 ounces of production in 2025. That's with nothing from Valentine and nothing from our Los Filos mine in Mexico. So you layer those on top of that, we could be above 1 million ounces this year with these all-time high gold prices. So we'll start paying down that debt very, very quickly, and then we get much faster to our target of dividends and share buybacks.
Okay, and come back to the people thing, because it's a time, it's kind of reset moment as well, in a sense that you've got these new people coming working together, you've got new assets under the same roof. Looking for efficiencies it'd be a great time to start to maybe review things somewhat and increase those margins. So who's in charge of that process, or what goals have been set?
Let us get the transaction done first, right? So we're hoping to have the shareholder votes in April, and then if everything goes according to plan, we need to get Mexican COFECE approval, Canadian regulatory approval. Hopefully the transaction is able to close by around the end of May. Then the next step is to go have this combined team go and look at all the assets together. It's great to have a fresh set of eyes looking at our properties. Our Greenstone team, maybe can help finish up Valentine and get it into production and commission smoothly. So it is great to have, like I said, a fresh perspective to look at these things. A lot of the questions we've been getting are like, do you really want to have 11 mines long term, right? Are you going to start to rationalize the portfolio? Our target has always been sort of mines that produce 150 to 200,000 ounces plus per year. Obviously, you want the lower cost mines, like $1,200 to $1,000 sustaining costs. All-in sustaining costs these days is a pretty decent price tag for that. So we would start to look at the asset portfolio and say, do we divest some of the smaller assets, some of the higher cost assets? That's something that we'll look at, but we need to get the transaction done and let Darren Hall, who will be the chief operating officer, let him go and get boots on the ground, meet the team, see if he finds optimization opportunities at the asset and what makes sense in the longer term portfolio. And Equinox Gold does have a history of optimizing the portfolio. We have sold 2 of our smaller mines. We've spun out our non-core assets to create 3 new companies. So that is something that we've always been done as we've been building the company, with the ultimate objective of having these big, long life, lower cost mines, which we'll have with Greenstone and Valentine, we'll have with the Castle Mountain expansion. That's what we're looking for longer term.
Right. If I go, I want to come back to the transaction and the thought process, because there's a sort of an ambition and aggressive expansion mentality clearly with Ross on most things. But and you've had a good 2 years. I think nice, steady, creative growth as sorting things out in terms of the production profile, etc. But you weren't looking for an acquisition. It sounds like it was sort of like a sort of casual lunch conversation, right?
Very casual conversation that sort of, as they started to think about it, we're like, oh, this actually does make sense. And you can't, you can't choose your timing for a transaction, right? We weren't looking for Premier Gold when we acquired it in 2021. It just, when somebody, I think again, probably a casual lunch, somebody's like, hey, have you looked at this asset in Ontario? It looks pretty interesting. It's got all its permits in place. It's shovel ready. It needs a team to come in and run it. And we're like, oh my goodness, this huge Canadian mine. How often in your career do you get a fully permitted shovel ready Canadian mine right beside a highway with all of the Indigenous agreements in place? Like, and that's exactly what we've got with Valentine, right? Where they've got, they're ready to go. Construction is nearing completion. They're hoping to pour gold around the middle of 2025. Like, that doesn't come along very often. The timing may not be ideal, but you can't pick the timing for transactions. You need to be able to move quickly and be opportunistic when things make sense and have those synergies that you're looking for. And that is another reason why you want to, start to quickly deleverage the balance sheet, because that gives you the financial flexibility to be able to make these decisions. Like, there have been some things that looked kind of compelling over the last couple of years, but we weren't in a position to do it because we were busy building Greenstone and didn't have the financial capacity to be able to move quickly on something. Once we get the balance sheet paid down, we will.
I think that's great. Getting that liquidity back into as part of the armory, as it were.
Just gives you more resilience. And again, getting these bigger, lower cost mines in brings our own sustaining costs down. Now we've got better resilience to be able to weather like a gold price drop if it happens. Most of the banks, all of the banks, I think, are predicting higher gold prices. So hopefully that doesn't come for a few years. But you want to always make sure you've got that stability built in so that you're not getting crunched if you do run into those situations.
Yeah. And who knows what happens with the dollar this year? There's a lot up in the air at the moment.
It's a complicated world we're living in.
It's a very complicated world, and as they're shoring up that cash position, that gives you a massive optionality.
Yeah.
Now, it just intrigues me in terms. I know you weren't looking for anything, and finding this seems to be a perfect match for you. But there doesn't seem to be a lot on the table for others to look at, and certainly not anytime soon. Permitting issues, and closing that kind of development loop that they're all kind of stuck in at the moment. A lot of competition, though. There's a lot of competition,
and that was
on the buy side.
Mm-hmm. And that was another piece of the logic of this transaction, is there's also competition for investors, right? Now, Calibre and Equinox were both in this sort of mid-tier space. There's like 40-something companies, all in the same sort of market cap, same sort of production level. This catapults us into that sort of elite senior producer space. I think there's 8 companies globally in that sort of $4 to $10 billion market cap. Only 4 of them are listed on the North American Exchange. So all of those mid-tiers are competing for investors, eyeballs, assets, people, right? By moving up into that higher sort of elite group, now it's a very different perspective for investors who need the liquidity, who need the scale, those generalists who want to get into I hope they want to start to get into the gold space, but need that sort of higher level of market capitalization to be able to justify the investment. Now, we were in a very different peer group from both a production perspective, but also with the investor perspective. And then all the ETFs, for example, we expect a huge inflow of cash just from the ETFs, and the index is having to rebalance as we're a bigger company. So that alone drives buying.
So that the whole register is evolving and changing. People think when you get to a certain size, a $3 billion company, you get to a certain size, and it's harder to move forward. It's harder to talk a growth story, but you've done that.
We've done that, and we still have that built into the portfolio. So that's sort of the difference too between like the senior producers versus the massive producers, right? Like the Barracks and those things, is we still have all of this growth built into the portfolio that's coming over the next 2 years. Our Castle Mountain expansion in the States will add about 200,000 ounces a year. Again, low cost production, long life mine. We are hoping to do a large expansion at our Los Filos mine in Mexico. That will add another 150 ounces per year, bring the cost down significantly of that project. There is upside potential at both Greenstone and Valentine with underground deposits, the potential to expand throughput. We've got, both companies have had huge exploration success at their assets. All of these mines are very prospective to be able to extend the mine life, but it's that the immediate bump to production and cash flow now, but also the growth that's built into the portfolio so that we don't need to do more M&A. We can still grow the company and create this long-term, profitable, sustainable mining company that hopefully will be operating 20, 30, 50 years from now. That's what we're hoping to do. Neither of us were looking to build these companies and sell them. Calibre was not looking for a takeover. That's why we've structured this transaction as a merger of equals. We both recognize the logic of coming together to turn 2 mid-tiers into a senior producer that's in this sort of elite group, and that's going to add value for both shareholders, but all of the growth that's built into the portfolio if you look at, I don't have the charts in front of me, we've got this chart that shows like we're trading down here from our peer group, but our growth potential is the highest, 60% production growth expected in the next couple of years, plus more beyond that. It's pretty compelling, I think.
It is compelling, but I think I said this before we started, is I kind of enjoy these conversations because I don't necessarily need to worry about the technical aspects of, can you build mines? Can you?
Yeah, we've done that. We've built 4 mines now.
Exactly. You do those things, and it's really a case of, and as an ex-analyst, I would say this, I just want to know you hit your quarterly numbers.
Yeah.
That's good enough for me. And then talk to me about this kind of profile, growth profile in terms of production. And that kind of leads on to the actual question I want to ask you, which is about, with the growth profile that you're going with, is mining harder today than it was 5 years ago, pre-COVID, than it was 10 years ago? Because we had this sort of spate of ESG and NGO action and anti-mining environment. How do you sort of take care of the fundamentals of doing your business, operating?
I don't think it's harder. And I think there's this misconception that mining companies are finally focused on ESG. We've always been doing ESG. The only shift is that now people are reporting it, right? Because there's the move toward potentially mandatory reporting. We've always been doing this in the background, because if we didn't, we wouldn't be able to maintain our social license to operate. You have to be working with local communities, indigenous communities from day one, consulting along the way, because you need that local community support, right? We've seen it at mines around the world where the communities are like, no, thank you, we don't want this here. And those mines don't go ahead. And if you're not doing the right thing environmentally, the environmental regulators are going to come in and go, excuse me, you need to do a better job or we're taking your permits away. And financial resilience, like you need to be doing the right thing from a governance, a financial, being prudent with your shareholder dollars. Like these are all things that either mining companies are doing along the way, and that's why they're still here, or did poorly and they've been taken out, or they've gone bankrupt, right? So I don't think it's any more complicated. I think the difference is that we're being more vocal about it. I think there was a tendency, I've been in mining since 1995. So 30 years, I think it's officially a career now. But there is a tendency, I think, historically to kind of keep your head down, because there was the concern that maybe the NGOs would come after you if you stuck your head up. So people were doing these things quietly behind the scenes, and now we're being more public about it, which I think is really important, because mining creates incredible opportunities in local communities from a healthcare perspective, from an infrastructure development, from an employment, from business opportunities. Like we do incredible things on the ground, and we haven't been communicating that effectively historically.
Talk to me about your ideal investor profile. What type of investor would I need to be attracted to you?
I'm a bit of a different cat when it comes to that, because I am happy to have all investors. Whether you own 10 shares or 10 million shares, to me, you deserve just as much of my time. In some ways, actually, this smaller...
But how do I need to think of you? Let me put it that, maybe that's a better way.
And you need a mix, right? Like if all of your investors are just a long-term hold, they buy and they're going to hold you for 20 years, now you have no liquidity, right? So you need a mix of those long-term holds, the hedge funds who are making things volatile in the market, the ETFs. You need the retail investors to go and tell their buddies. Like you need a mix, I think. But certainly you want someone that understands the story, right? You want someone who has a long-term vision, understands the management team, has taken their time to talk to us, to do their due diligence about the assets, to understand what we're trying to create. And hopefully that gives them the comfort to not look at the share price every day, not get anxious if the share price drops. Like gold went down $100 last week and everybody plummeted, right? The people who are only following one stock and are not looking at the broader market dynamics get really anxious when that happens, right? So you need to, I encourage people to call and ask and get some clarity on what we're doing, what our vision is. Google the team. Look at Ross Beaty. He's an extraordinary human being, but he's created incredible shareholder value over the years. People that understand Ross's track history and the fact that he's never sold a share in any company that he started, that gives them the comfort. If Ross Beaty's in, I'm probably in, because I know he's a smart guy and he's done his due diligence. The retail shareholders do the same thing with institutional investors. That's why it's so important to have a fairly large institutional holding, because they know that they have a whole team of people that are crunching the numbers and doing all the risk profiles and looking at the ESG and looking at the financial governance. And those institutional investors don't buy into the stock unless they have comfort that this company is being operated effectively and responsibly. So that institutional ownership gives the retail investors the comfort of going in because someone else has done the groundwork for them, right? but you need a good mix of shareholders to keep the liquidity that allows the generalists and those people to come in so that they know that they are not going to get stuck in the stock, that they can move shares if they want to.
Are you hopeful for the mining exchanges surviving what we're going through at the moment? It feels like we're dealing with things like shorting issues across the board. We've kind of got the slight distrust from some aspects of retail saying, well, come on, we've destroyed a lot of value here. You got to do better, guys. There's no accountability. Do the future look bright?
Oh, I think so. I mean, I've been in this industry for 30 years. Some of the best people in the world are in this industry. I think you have to pick your investments carefully. You need to look at the team. I think the team is key.
Easy for you to say.
To success, right? Like, how they manage previous companies responsibly. There's a lot, and there's been a bad reputation out there for, lifestyle CEOs who are in it because they love to travel to Cape Town to do those conferences and then go and have a bit of a wine tour. Like, that's not who we are. That's never been who we are. That's what brought me to this company in the first place, is like Christian gave me this pitch, like, we want to build a big company, we want to build it for the long term, we want to build value, we're going to pay incredibly low salaries because we're committed to, and I'm like, I'm in, because that's what I want. I want people who are committed to building something that's a legacy for our team, that you're not here for the paycheck, that you're here because you're building something of value. That's I think what you need to look for.
The secret sauce is that.
Yeah, and if you talk to Ross is like, plus we have to have fun, right? If you're coming to work every day and it's a drag, that's no good. That's not good team morale, right? You got to make sure that you're doing fun things for your team, that you've got that teamwork, that everybody feels like they're pulling in the same direction. Like we did that ride to Green, right? I have a tattoo. Can you see it? I got the logo of the Ride to Greenstone tattooed on my ankle because it was such a cool experience because we did this incredible thing that was the teamwork, team building for our people across the world. We flew people in from Mexico, from Brazil, from the States to join the bike ride. But we also did this incredible thing for the local communities. We raised $1.3 million for the local hospital. That was their largest single donation ever in the history of the hospital. We've changed healthcare in that region for generations, right? And the local communities were like, this is amazing. Like that somebody's willing to do this. It was such a cool experience. And to do those kinds of things is unusual, and to look for opportunities to do that where you're adding value for your team, but also for the community. So really everybody feels like they're one big family. Like Ross always says to people, like, Equinox Gold is a family. And I say that to shareholders, welcome to the family. And they think we're joking, but we're not.
I know you're going to hate this, but I'm going to shake your hand.
It's okay, one person. It's when it's 10 people in the space of 2 minutes that it gets weird.
It's very confusing. Thank you so much for your time today. Super excited. Come back on when the integration is happening.
Yeah, let us get the transaction closed, get the team together, go and look at the assets, get a bit more sense of the longer term vision for the combined company. I think that it makes sense to come back.
Perfect.
Thank you.